items included in gross income, specifically divorce payments. Now, alimony, these are payments in divorce. So if you get divorced, you may, by a court, have to pay alimony payments. Now, these have different tax treatments depending on whether the divorce or separation agreement was executed before or after December 31st, 2018. Quick note, a lot of times real dates will not be used on the exam because, well, that would just confuse people. And so we see year 2, year 3. However, if you see a real date on the exam or in our questions here on the site or anything like that, that's generally for a real specific reason. And that's important. Why is this a thing? Well, remember our good old Tax Cuts and Jobs Act. This changed the rules. So any alimony before 2018 has different treatments, different rules, and any alimony after from divorce is finalized after December 31st, 2018 have different rules. So just keep that in mind. There will be things throughout the exam where the real life dates are important. Remember we saw earlier the Series EE bonds, right? That date, we're not worrying about that because that was so long ago, but this was relatively recent. Maybe you're watching this many, many years in the future, but this will still be relatively recent compared to like that 1989 date. Now, for alimony executed before December 31st, 2018, for divorce or separation agreements executed, finalized before December 31st, 2018, memorize that. Alimony payments are included in the gross income of the recipient and are deductible by the payor. That's a very different treatment than what we see here because for divorce or separation agreements executed after that date, alimony payments are not included in the gross income and are not deductible by the payer. So it's what I'd say is it's much more simple after 2018. But if you're dealing with before, if we finalized our divorce agreement on the date prior to that, Jack, by the courts, is required to pay $2,000. And why do I say is required to in the courts and all that? Because we'll see later on, it can't just be you two making it up because then you could make up some scheme, right? That's kind of why. Now, Jack is going to be required to pay Jill $2,000 per month in alimony. In this case, Jill must include the $2,000 monthly alimony payments in her gross income, even if we're talking 2022, right? If it's still going on all the way until then, you still have to include that, while Jack can deduct the payments from his taxable income. For these after 2018, the example here, Tom and Mary finalized their divorce agreement after that date. Tom is required to pay Mary $2,500 per month in alimony. Now, in this case, Mary does not include the $2,500 monthly alimony payments in her gross income, and Tom cannot deduct the payments from his taxable income. These are items that would affect your 1040. As such, it's important, but we see the differences here. Make sure you have that memorized and down. Let's run through how are we going to treat child support payments. Well, child support payments, these are not included in gross income. Why is that? My rationale using the IRS's mentality is save the children, leave the money for the children, don't mess with the money meant for the children. Sure, you can mess with the alimony payments depending on the date, but child support payments, leave all of that money to the children, don't let it get taxed. Now, these are not included in gross income, not deductible by the payor. Regardless of when the agreement was executed, no dates we have to consider. If both alimony and child support are required and full payment is not made, any payment made first applies to child support. Now, this example we see here, this could easily be a multiple choice question, something you see on the exam. And what is this? Well, we have a requirement to pay $1,000 per month in alimony and $500 per month in child support. However, 1 month, Mike only pays $300. Sorry, it just happens. That's what's going on this month. There's just not enough money to go around. Now, is there legal repercussions for this? Possibly, but that's not really up for us to talk about. This is more so the tax situation. In this case, the entire $300 payment, since that's all there is, it's first applied to the child support obligation, meaning $300 goes to the child support, leaving a $200 child support balance, meaning they still have to pay. Mike still has to pay an extra $200 whenever Mike gets around to doing so, and no alimony is paid for the month. Now, this could further go into a question where it's before or after that 2018 date, and you need to take into account what amount would get reported on the tax return. That's just kind of how we see that in practice. Property settlements. Now, property settlements during a divorce are not subject to income tax or deductions. Transfer of property between spouses during the divorce is generally a non-taxable event. And this kind of also goes into how property transfers or just transfers of any assets between us two spouses is not going to be a taxable event. The IRS doesn't view you as people. The IRS views you, if you are married filing jointly, as one entity. And as such, if you transfer, you give your husband or wife a necklace or money or a car, that's just transferring between the same entity. just as if you were both subsidiaries of the company, just transferring between those two types. That's how the IRS views you. You can live with it how you want. Now, during their divorce, Susan transfers a rental property worth $300,000 to her ex-spouse, Robert, as part of their property settlement. Neither Susan nor Robert needs to report this transfer as income or a deduction on their tax returns. Very good. Let's keep moving along. I kind of mentioned earlier a little bit about what's considered alimony, the legal implications of that. Let's talk about that further. In order for payments to be considered alimony, and why is that important? If it's considered alimony, well, then it follows our rules about prior to December 31st, 2018 or after. They must meet 6 criteria according to the IRC prior to the Tax Cuts and Jobs Act. Now, it's essential to note that the tax treatment of these does change after our date. Just keep that in mind. Don't forget that. For divorce agreements executed or modified after that date, alimony is no longer deductible and not considered income, so this doesn't apply. However, you will be asked questions talking about alimony payments from divorces before that date. And why is that? Well, you could have a divorce that happened 2017, and maybe there's alimony payments for the next 10 years, the next 20 years. I don't know. I'm not a divorce expert. I don't really know how long alimony payments usually go for, but that is why we are seeing questions still about this. Now, for divorce agreements executed before January 1st, 2019, this is essentially the same thing as 12/31/2018. Will the exam try to trick you between those two dates? No, don't worry about it. For the purposes of the exam, 12/31/2018 will be the same as 1/1/2019. So for divorce agreements executed before this date and not modified after that date, these 6 criteria must be met for a payment to be considered alimony. Well, it has to be paid in cash or a cash equivalent. Otherwise, it could be a property settlement. We'll talk about that in a second. There needs to be a written separation agreement or divorce decree. Payments must be made under a divorce or separate maintenance decree, a written separation agreement, or a temporary support order issued by a court. So it needs to be basically documented, essentially. You cannot file a joint tax return with each other for the tax year in which the alimony is being claimed. Not allowed. If you're divorced, you're not filing a joint return. The spouses must be living in separate households at the time the alimony payments are made. Payments made while living in the same household do not qualify. And all these rules, you can kind of think, well, why are they enforcing these rules? What's the point of all of this? There's many tricks that you could try to pull. Maybe you do a fake divorce and maybe one spouse has a lot less income and you're making quote unquote alimony payments to the other spouse to save money on taxes. That is one quote, I'll call it a scam. One scam you could pull. So this is the IRS trying to make sure this is a legitimate case. No spousal support obligation after death. The payer's obligation to make payments must end upon the death of the recipient spouse. This requirement should be clearly stated because if we are making payments after the person died, then it wouldn't be alimony. Your alimony is paying someone after you are divorced to keep them alive to sustain their lifestyle. And lastly here, payment not designated as something other than alimony. The payment cannot be designated as something other than alimony, such as child support or a property settlement in the divorce or separation agreement. It has to be clearly defined as alimony. These are 2 separate things with 2 separate tax treatments. Now, for payments meeting these criteria, the payer could deduct the alimony payments from their taxable income, and the recipient had to report the payments as taxable income for divorce agreements executed before that date. That's why it's important. And moving forward, will this probably get dropped from the exam eventually, right? Because it'll slowly start to fade out, but who knows? Give it another year, give it another 10 years. I'm sure there'll be a crazy amount more changes to the tax code. That's just the nature of the game. Let's see a nice little example here. Let's assume a divorce settlement where the following assets are transferred between spouses. Great example of seeing how all of these are treated. Not great because we're dealing with divorce, and gotta love this exam dealing with divorce and death and lots of morbid things, but hey, that's life. Now, let's examine each of these assets based on the criteria mentioned on the previous slide in order to determine if they are considered alimony. First, we have an automobile with a value of $20,000. Well, this is not a cash or cash equivalent, does not meet that first criteria, and therefore it's not considered alimony. Pretty straightforward. Second home with a value of $200,000. Now, similar here, it's a non-cash asset, so it's not going to be considered alimony. Cash payment of $5,000 per month for 60 months, total of $300,000. This asset does meet the first criteria because it's a cash payment. Now, there's no other details, but let's assume it meets the other 5 criteria. It's made under a written agreement. They're not filing a joint return. Everyone's living in separate households, and there's no obligation to pay after the recipient's death. and it's not designated as something other than alimony. If all of those things are true, then this cash payment can be considered alimony for agreements executed before that date. Then next, we have a one-time cash payment of $50,000 designated as child support. This is going to breach that rule. It's designated as something else. This is child support. As such, it's not alimony. And lastly, a stock portfolio valued at $100,000. Now, I know a lot of these are the same. Hey, it's not cash, so it's not it. Giving you different examples, so you see it, familiar with all of these examples for the exam. Similar to the automobile and second home, this is a non-cash asset, does not meet the first criteria, and this would not be considered alimony. These other things would be property transfers, property settlements. In this example, only the cash payment of $5,000 per month for 60 months can be potentially considered alimony if it meets all the 6 criteria. All of these other ones do not qualify as alimony. All right, more examples. Let's run through it. Let's master these types of questions. Parker, a divorced person and custodian of his 10-year-old child, filed his 2017 federal tax return as head of household. The divorce agreement executed in 2017, so definitely before our marking date, provides for Parker to receive $4,000 per month, of which $800 is designated as child support. So interesting, we got to take that into account. After the child reaches 18, the monthly payments are to be reduced to $3,200 and are to continue until remarriage or death. Very interesting point here, I want to point out. This question could also eliminate that. And you'd still have to know how much is child support. And how would we know that? Well, if this, and this is a common way, if you see a question asked about this, it's a common way they would ask it. So after the child reaches 18, child support is cut off once the child reaches 18. So if the monthly payments went from $4,000 to $3,200 once the child reaches 18, well, that must mean that $800 of this payment was child support. But in this question, it does tell us that. Just pointing that out for you to understand, for you to know, because that is something you could definitely see and be expected to figure out for a question. Now, the monthly payments are going to be reduced to $3,200 and are to continue until remarriage or death. This is another criteria of alimony. However, for the current year, Parker received a total of only $9,000 from his former spouse. Parker paid an attorney $2,500 in the current year in the suit to collect the alimony owed. Now, what amount should Parker report in the current tax year as alimony income? None of the payments received should be considered alimony income. Parker would only claim alimony income if his total receipts from his former spouse exceeded $9,600, which is the required child support. Now, we are looking at this from an annual basis. And from an annual basis, $800 per month for child support times 12 months, that's going to give us $9,600. So we see here that we only got $9,000 from the former spouse. That doesn't even cover the child support. As such, this is prior to our cutoff date, our 12/31/2018. As such, we should count alimony in our income. However, because we only received $9,000, and that doesn't even cover child support for the year, we're not going to be required to include any of that as alimony. Now, this attorney fees, we're not going to consider that. That's not going to have any taxable effect for us. Not that we have to worry about here. $0 alimony income. We would only claim alimony income if total receipts from the former spouse exceeded $9,600. Now, in the event of payments consisting of both child support and alimony, child support obligations satisfied first. You want to beat that to death. Make sure you got that in your mind. Note also that if the agreement was finalized after this date, we wouldn't actually have to worry about much of this at all. Alimony payments would not be considered income in any situation. There we go. Here's our math over here. $800 of monthly child support, 12 months, $9,600. We had actual payments of $9,000, and as such, none of that is left over for alimony. Another example down in the books. You are going to do so well in this exam. Keep practicing. You can do it. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.